So it sounds like there's a 50-50 chance that we're going to see a rate rise in September. Does that heighten the odds or lower it for the markets?
Well, that's not too far from where the market is betting right now, but I think the odds are actually higher than that. Personally, I'd say they're probably 2 to 1 that we get it. I think the economy is a little stronger than the Fed does right now. I was actually quite surprised that they lowered their full-year forecast for GDP growth to 1.9%. We think it's going to be closer maybe to 2.5% when all is said and done. So I think the odds are actually a little bit higher than what both the Fed is saying and what the market is saying.
All right. They might have revised down for the first quarter. Well, for the first quarter, I mean, it was not looking good, but at 2.5%, it really suggests that there's an acceleration of growth. Why do you see that?
Well, it's mostly related to consumer activity. We don't have a lot of data points to support this argument yet, but we have the beginnings of them. We had a pretty good retail sales number in May, a little bit of a revision for the prior month, but especially the housing market has really come on strong, and that suggests that the consumer is suddenly starting to loosen up the purse strings a little bit after a period of head scratching, despite the increase in disposable income from more job creation, lower energy prices, and so forth. It looks as though now, at last, the consumer is starting to come to the party.
What's a good market strategy?
Well, we like equities. We like them in the U.S. We're about neutral relative to our global benchmark for the U.S., only because valuations are pretty full. In terms of our asset allocation, we actually prefer the Eurozone, especially now that it seems as though we're close to a deal on Greece. That will allow the market to focus on the fundamentals there, which are getting better. And, of course, we have a massive QE program. And we also like the Japanese market because of all the stimulus that's going on there, and in both cases, a much weaker currency. So we like equities in the developed markets of the world, a little bit underweight on the emerging side, mostly because of our aversion to Latin Americans' a commodity-centric economy. We don't think that commodity prices are due to do too much here in the second half.
All right, but when it comes to Greece, it looks like internally, at least in the Syriza party, there's a lot of infighting. There is still, even if Tsipras does say this is the deal that we want, he might not get the support for it, and he might not end up being the guy ultimately. Does that mess things up for your sense of optimism?
Well, it certainly would if it happens. I expect that he'll be able to push this through, but there's no certainty there, of course. And, you know, it's not over until it's over. So I'm holding my breath that we'll get something done the next few days, certainly by the end of the week, hopefully. But you're right. If it doesn't happen, then all of a sudden, you know, a Greek exit is back on the board, and the uncertainty is there. But again, it's an odds kind of a bet. I would say it's probably, you know, 2 to 1, very similar to the Fed expectation that we'll get a deal on Greece, because it's probably the best deal they're going to get.
Yeah, well, you know, David, I mean, Asian markets really taking a cue from Wall Street in terms of how you read the sentiment. At the end of the day, what can we expect? What else could be driving the markets there on Wall Street this week? We should be keeping an eye out for.
I think it's going to be the economic data. Tomorrow we'll find out what, or later today we'll find out for, you know, what GDP was in the first quarter. You know, we think it's going to be revised upward to a minor correction of 0.2%, not the 0.7 that was previously reported. But also you're going to get the following day consumer income and spending. And expectations are that consumer spending should look pretty robust. So if we get that, that will reinforce our view that the consumer is coming back to the table. And don't forget that 70% of the U.S. economy. So if they're back in a bigger way, I think that will continue to push equity prices higher.